Hi everybody, it's Matt Graham from Klein Financial here, and welcome to Retirement and Estate Planning 101. Today's topic, what's so great about RRSPs? Well, there's a couple of things that are great about RRSPs that I think everybody should know, but before I get into it, let me quickly explain what an RRSP is again. RRSP is just a 4-letter acronym for Registered Retirement Savings Plan. Now, registered means the money's registered with Revenue Canada, and it's registered to receive special tax deferments. Retirement savings plan, well, that part's pretty obvious. I mean, this is money for you to use once you've retired. But it's those tax deferments. That's what's really special about this. But let me explain a little further. You see, the government of Canada, they're worried about you. They're worried that you're not saving enough money for retirement. And they're worried that someday you might run out of money in retirement and they'll be responsible for you. And they really, really don't want that. So what they've done is they've created an incentive program to try to get you to save more money. And what they're saying is, for every dollar that you invest into an RRSP plan, they will defer any and all taxes until you withdraw the money at retirement. Most of us, though, we've already had income tax deducted through payroll deductions at work. So we see this money come back to us when we do our tax refund at the end of the year. Now, some people now are thinking, yeah, that's great. That's why I invest in those things. I love them. While other people out here, you might be saying, you know what? It doesn't make any sense to me. Why would I, defer the taxes? Why don't I just get it over and done with now rather than having to pay taxes when I'm retired and not working? Well, there's two main reasons for that. Reason number one is compound interest and the power of compound interest. Now, so let me give you an example to explain. Let's just say, for hypothetical purposes, you're able to set up 2 separate accounts and invest $10,000 a year into each of them. One of them is an RRSP account and the other one is a non-registered cash account. Both investments receive 7% interest every single year. Okay? The only difference is the non-registered investment is being taxed on that 7% at the end of the year every year, while the registered investment is being allowed to compound internally year over year without any taxation whatsoever. Everyone still with me? Okay, good. So 20 years goes by and you're retired now and you're ready to withdraw this money. Your non-registered investment, now it's grown to $316,000. That's pretty good. That's great, right? But your RRSP plan has grown to $438,000. That's a difference of $122,000. Does that seem like a big deal to you? It certainly does to me. That's one of the main reasons that we invest in RRSP plans. Reason number 2 is what I like to call the tax game. Now, the tax game is a game that's played by you and me and your accountant. All right, now I'm your financial advisor and your accountant is your other person that's involved in helping you get ready for your retirement. But what we're trying to do here is you see, when you're in the working world, we're trying to save you as much money as taxes as possible. And right at that point, you're paying usually 30 to 40% in income tax. So any money you put into your RRSP account, you're going to receive 30 to 40 cents back on every dollar you do invest. Once you go to withdraw this money and you convert your RRSP into a RIF, which, by the way, we'll talk about in another video. When we start withdrawing that money, we're hoping you're going to be in a lower tax bracket. So we'll be able to withdraw this money at a 20 to 25% tax bracket, giving you a net tax gain of anywhere from 15 to 20%. That can make a huge difference in your retirement plan. Now, I do recognize, though, that might seem a little bit trickier to understand. And if you have any questions about either of these things, please give me a call. My number is 519-721-7254. You can also just send me an email at mac@kleinfinancial.com, and I'm happy to answer any of your questions. But what I really am trying to get at, the point I'm trying to make is a well-executed, well-strategized RRSP plan is an essential part of anybody's retirement strategy. And it should be part of it. You just need to talk to your advisor and your accountant to make sure you're set up properly. If you have questions, again, give me a call, 519-721-7254. 7254. This has been a Retirement and Estate Planning 101 lesson, and I thank you for tuning in. Have a great day. Bye-bye.